This lesson is about pay stubs. So when you work and at the end of your 2 weeks or whenever you get paid, your employer will give you a record of to show how much money you've made, what deductions may have come off, and so forth. So in this instance, it's really important as an employee, when you receive your money, you look at your pay stub to see, did your employer make any mistakes? Look to see what's coming off of your pay stub. Make sure you can make sense of it, because you never know if something along the way there was a mistake, and you need to be able to be accountable for everything that you have worked for, and make sure all your hours add up. So last day when we looked at this, we talked about gross pay, and we talked about that when you actually, your gross pay isn't necessarily what you actually take home at the end of the day. There are deductions that are going to come off your check. That's the realities of working any job. You are going to have some deductions. And so basically, as we go through today and look at our pay stub, we're going to be able to see all those pieces that do get taken off your check, what they're getting taken off for, why are you losing all that money, or feel like you've worked really hard for all that money and now you're losing some of it. So a good example, here's an example of a pay stub. Now, not every pay stub is going to look exactly like this, but there are a lot of pieces to this that are going to be very, very familiar that you're going to see. So typically your pay stub, you'll see it'll be to you, whatever your name is. It will tell you specifically the pay period that you're getting money for. And then as you go through your pay stub, you're going to see, hey, what you actually worked, what are you working in terms of how much you're making per hour. And usually it'll tell you how many hours you worked. And then it will talk about during this particular pay period, that's what this period stands for. This indicates how much money you made. This YTD this means year to date. So this is saying, as you work through a whole year, and a year meaning starting from January to December, that's what is considered typically for a year to date situation. In this case, Joe has made this amount of money from January to September. So I'm gathering he hasn't been working a whole lot more part-time hours. Maybe he just started. Maybe he just started in August, and this is what he's made so far in total. Coming back over here, so this was his regular hours, and then he had, it looks like, 1 overtime hour at $20 some per hour. So it also will show some, hey, if you're entitled to statutory pay, meaning statutory holidays like July 1st, Christmas Day. Also in here is vacation pay. So there's lots of different ways that you're going to see what your amount of money is going to look like, how much you've earned. Then from yesterday, we talked about gross pay. So this is how much Joe is making before any deductions come off. So now if we go over to the other side of the pay stub, the other side of the pay stub looks at the deductions that have come off. So this is basically all the money that Joe is going to get taken off of his check. So as we go through this whole process, we're going to talk about more of these pieces and specifically get into the deduction side of it. So in this case, when it says what categories of deductions are made from gross pay, well, we're talking about right in here. This is all the pieces that you look at these amounts. This is what's going to come off of Joe's check. These deductions, they're not the same for everyone. Okay, some of these are very standard pieces, Cpp, Ei, and we'll talk about these more. Health plan, that might look a little different. Other deductions that could pop up, some people, companies have a charity donation piece where they'll take a certain amount of money off of your check every pay period where you can donate that to a specific charity. Some may have not just a health plan, there might be a dental plan piece to it, or there might be a parking fee where you have to pay for your parking spot. So there are different deductions for everybody depending on where you're working. Now, to get into some of those specific deductions, we're going to talk about CPP and EI. So you notice these two pop up on the top of your deduction list. Well, CPP is simply the Canada Pension Plan. And now, basically with that, everybody pays into the Canada Pension Plan. You're going to pay into that no matter what job you're doing. And that's a benefit to you. It essentially what happens is it's putting money away. Every paycheck you put money away. And then when you turn 65, you're getting that money out. So you're basically contributing so that when you turn 65, you basically can continue getting a wage. EI is employment insurance. So this is essentially an insurance you pay into so that if something should happen and you get laid off from your job, you lose your job, the company has to close and you lose your job that way, you've paid into employment insurance. And as long as you put in X amount of hours in there and contributed, then you will be able to claim employment insurance where you basically will get paid until you can find another job within the next year. So that's helpful. They seem like, oh, there's money coming off my check, but in the end, they're going towards good purposes that you definitely, your Canada Pension Plan, you will get money out in the end when you turn 65. And employment and insurance, it's an insurance policy basically in case you do lose your job and you need money to help you look for a new job. You can't stay on employment insurance forever, okay? So you're basically looking, it's to buy you some time to look for a new job. Now, the next two pieces of deductions that you'll see are what we call the federal tax and provincial tax. So these, again, are pieces that everybody will pay into, and that is going to change. This amount that's here that gets deducted will vary depending on your personal circumstances. It varies on how much you make for your job. It varies depending on what province you're living in. So there's lots of circumstances what affects how much money comes off as a deduction. So anytime you start a new job, your employer is going to require you to fill out what they call a TD1 form. And it's just for personal tax information. They just need to know how much income tax they're going to end up deducting off of your checks. So don't be alarmed if you see that, or maybe you've seen that already because you have a job already. So that is a general practice that will happen with any new job that you start. So in addition to paying taxes, many people, you're going to pay amounts from your gross pay, any other deductions that can come up. And this is where the varying piece, depending on the job you are or the employer you're working for. So there might be certain benefits. I talked about some people have to pay staff parking. You may pay into a dental plan so that you don't have to pay when you go to the dentist. Some employers have savings plans where you can actually pay into or have money deducted off your checks where it will go into an additional savings plan for you and you don't have to worry about saving money. So there are lots of different types of deductions that can also come off of your check. So one of the other things that we look at as we go through this is you look at the health plan deduction in this case. So this is one of those kind of one-off deductions that not every company has, but some do. And in this case, the deduction was $21.28. So based on this particular deduction of $21.28, we want to know what percentage of Joe's gross pay did he pay to the health plan. So just as a, just to try to figure out, if we're talking percentage, like how much of his check is he actually having to pay to his health plan? So if we think about that, we're just taking the deduction of $21.28, that's the health plan deduction, over what was his gross pay? If we come back over here, his gross pay ends up being this $658.35. So if we take the $658.35, we take the $21.28 divided by his gross pay, that's how much out of it is, and times it by 100. So because we're talking percentage we want to get to. So if I take the 21.28 divided by 658.35 and times by 100, I am getting a 3.23 and so on. So when it's asking for percentage, we can say nearest percent in this instance, let's round it to the nearest whole number that we got. So really Joe is paying 3% of his gross pay is going towards his health plan. So when you think about it that way, 3% out of his whole check, that's not a huge amount of money. That allows him that in the end, if he does have to, dip into some where he has to go to the hospital or go to the dentist, depending on what that health plan covers, maybe it's for a massage, maybe it's to go to the chiropractor, that's pieces that are going to allow him to go to the chiropractor and not have to foot the bill for everything, right? So he'll get some of that paid for because he's paying into a plan. So when all of your deductions have been made, basically you take all of those deductions off, then you get to what do you actually get to take home. So in this case, Joe is, when we look down here, this piece right here called net pay, that's the actual take home pay. So this is what Joe is putting in his pocket. So this net pay right here, that $575.68, that is his net pay. That is what he is walking home with. Sorry, $575.68. Okay, so essentially, in order to get that net pay, you're basically taking your gross. So if we take gross pay and subtract all the deductions that Joe had, you're going to get his net pay or his take-home pay. So that's essentially how we're doing this. We're taking the $658.35 and we are subtracting from it all of these deductions that he has over here. So subtracting every single one of them. So if we went and added all of those deductions up, we'd get 25.92 plus 1238 plus 21.05 plus 2.04 plus the 21.28, which gives me the 82.67. And so when I subtract those now, 658.35, subtract the 82.67, you are going to get the $575.68, that take-home pay. So his gross pay at the beginning, when you're thinking, oh, he's making a great, like, that's awesome, he's making a lot of money. But then once you take all those deductions off, that is actually what Joe is walking home with. So we kind of answered a bit of the next one where it says how much of Joe's gross salary was taken off in deductions. Well, we kind of did that already. So if this was his gross salary, we said we took all of these deductions right here. Oh, sorry. Took all these deductions right here. We added them all up. So when you add all of those up, we got 82.67. Well, we're going to take that away from his gross pay, And that's what we're left with. So this here is, this would equal his net pay. But when we're asked to find all of his deductions, this is all of his deductions. Now, his percentage, well, the percentage of Joe's gross salary went to deductions. Well, same thing. Set your deductions on top. So the 8267 over what his gross pay is. So this is kind of like what we did with that health plan deduction when we just looked at one individual one. Now we're looking at all of his deductions. So we're going to take that, times it by 100. So we take the 82.67, divide it by the 658.37, and then times by 100. And we are getting 12.557. So I'm rounding that a little bit, but now, so let's look at this in terms of percentage. I'm going to say this is really 12. Actually, I could say this is, if we're going to round this to the nearest percentage, we could say this is 13% deductions. So 13% of his wages go to all the deductions that he has. So the last piece in this is to look at, well, if we look at Joe's pay stub, are we able to determine when Joe is able to cash or deposit his check? So in this instance, looking at it, we're able to, there's a couple dates in here. The one specifically says it's for a certain pay period. So that is for when he's going to get paid based on this time frame. Sometimes it'll say for a 2-week period in here and give you 2 dates in here from beginning to end. In this case, this might be, ending on this particular day for that particular pay period. When he can cash it or when it will get deposited into his account will be September 15th. Okay, so it doesn't have to do with when the calculations are made. It's when it actually went in. And sometimes it will actually say deposited, because sometimes you're able to set up where you're not necessarily going to get a check from your employer. They might just do a direct deposit right into your bank account. That is also an option. The last piece we can look at is, what is this number? That number is showing up here on your pay stub. That number is what we call a social insurance number. Social insurance number. Now, in order to get a job, you need to have a social insurance number. That's the way the government kind of has a way to identify you. Every person that has a job will have a social insurance number. And so that's one thing your employer, if you're looking for a job, they're going to request that social insurance number, because it's kind of like that's your tag. So everybody, federal government, provincial government, that's how they know you by. They don't necessarily know you by your name. All of that information will be in there, but that 9-digit social insurance number is the way that they kind of keep track of who you are. So everything, what you make, your income tax, all of those pieces get tied to this particular number. So when you hear we're just a number, people are just a number, well, we kind of are, right? You're a number based on your social insurance number. And that is it for pay stubs. So now you can go off and work on your practice.